If you haven't heard about Anchor, it's the easiest way to make a podcast. Let me explain. It's free. There's creation tools that allow you to record and edit your podcast right from your phone or computer. Anchor will distribute your podcast for you so it can be heard on Spotify, Apple Podcasts, and many, many more. You can make money from your podcast with no minimum listenership. It's everything you need to make a podcast in one place. Download the free Anchor app or go to anchor.fm to get started now.
Welcome to the Money Vikings Podcast, where we conquer financial freedom. Join Greg, Jerry, and Bob as they discuss everything investing and personal finance. The Money Vikings Podcast is hosted by three dads who are doing what they can each day to burn down debt and build wealth. Learn the path to true wealth. Their podcast and website, moneyvikings.com, is a treasure trove of ideas. So without further ado, here they are, the Money Vikings.
How to navigate a market that just does not care about my feelings. Is this relationship working? How are we creating all-weather portfolios in today's environment? And much more on the Money Vikings podcast number 54. Jerry, it's just you and I today.
Are your feet wings hurt?
How you doing?
I'm good.
Very
I hope
good.
our relationship is working.
Yeah, I don't know. It's it's been an interesting September, October, right? Navigating this market.
It certainly has. I think October is supposed to be one of the historically most volatile months, not necessarily the most bearish or anything, but it seems like it generally ends up higher, but it's a wild roller coaster ride to get there.
It sure is. And we're missing Bob today, but that's okay. We'll have him back on the next show, but he's having a great time. Oh yeah. Who? Yeah. This guy Bob. So he's having a great time in our premium channels, our premium Discord channel, talking with all of our members. And I'm having a great time getting to know everybody. But, you know, what's really cool, one thing is I'm really excited about is that there's people from all over the world. And we're connecting with all these like-minded folks and sharing ideas. And one of our members said that we are like, I don't know if people will remember this connection, but there used to be a show called Car Talk, and we're like the Car Talk of personal finance and investing. And I thought that was a really awesome, I took that as a huge compliment. I was really excited.
Cool.
About that.
Yeah, those guys are brothers, just like you and Bob.
Oh, there you go. Yeah, the Car Talk guys were great. That was a show that was on the weekends for years and years and years, and it just had a good thing going. So
I remember my father used to listen to it all the time. He loved it. He would always be cracking up listening to those guys. And then in the movie Cars, they actually had a cameo in that. They were characters of Cars in the movie Cars, the first one.
I did not know this.
Yeah,
I know this. Very cool. Yeah. So there you go. We're helping to fix the engine of your wealth driving machine.
You always
just
have
don't buy a car.
analogies.
Just don't buy a car. Just buy a really buy a 10-year gently used
Honda Accord.
Honda Accord or Toyota Camry if you want to be a millionaire.
There you go.
Yeah, that's the typical. That seems to be the typical car, but that's not very exciting. That's not like Lambos and.
No, they're definitely not the coolest cars out there.
Yeah,
but they work. They get you from point A to point B.
That's the idea. So if new folks want to sign up, by the way, we're at TMV Listen and they get a discount, right?
Yeah, that's the promo code. You go to moneyvikings.com and you click to sign up for MVP, and then on where it asks you for the code TMV, that's the Money Vikings TMV Listen for 30% off.
There you go. You can join our bonfires, and Bob does his charting, and we do all kinds of investing discussions. It's really cool. Happy Canada Day. Tomorrow is Canadian Thanksgiving. That is so cool.
That is awesome. I sort of get a day off of work, but that's neither here nor there.
I love it. What else in the news here? Jerry, tell us about Captain Kirk.
Well, have you ever heard of this show called Star Trek?
I'm a dude, I'm a huge geek. I'm a next gen guy though.
Yeah, so maybe Captain Kirk is going to space first. Maybe Picard will go in a later flight. Although I just read about 5 minutes before we started recording this show, it's delayed due to weather, but I'm sure he'll make it up there. That's pretty exciting. William Shatner is going to go on Blue Origins, following Jeff Bezos, and go into space. And
when's Musk going?
I don't know.
He's not doing any test runs. It seems like he's like just going to Mars. That's
maybe. Yeah. Send everybody else on the test runs. Then when they're ready, he'll go to Mars.
Jeez. I don't know how to trade this. I mean, we had a great discussion earlier in the week with some of our members about Rocket Lab, which is an interesting company out of Long Beach.
Mm-hmm.
And what was interesting to me is that it is one of the pure play rocket companies that can be publicly traded, because as you know, we've been talking about this for a long time. You can't invest in SpaceX, unfortunately.
Yeah, you can't. And also, this is Blue Origins, which I don't believe you can invest in either.
Oh, you'd have to buy Amazon.
I don't think it's part of Amazon. I mean, I think it's the same owner, but I don't think buying Amazon gives you anything. So, yeah, I think the competitor is Virgin Galactic Space. So,
gotcha. Okay, this is what Bezos is doing with the billions.
Yeah,
that's right.
Yeah,
moving it over to space.
Maybe a space ETF might be a way to play this. I'm not really sure. I mean, honestly, what can happen? It could be a successful launch, and space stocks just go to the moon, if you will. Or it could explode. Space stocks would that hurt space stocks?
Let's hope not. With Captain Kirk on board.
I hope not. It would be tragic, but how would it play out in the stock market, if at all?
Oh yeah. Well, the space stocks would take a hit for sure.
You think so? Okay.
Yeah, but temporarily. I mean, all this stuff. You know what? This bad stuff happens, and I mean, it didn't happen, but when stuff like that happens, it seems like humanity's like, well, we got to move forward. I mean, it's tragic, but we got to keep going.
Yeah. Yeah.
But anyway, I think he'll have a safe trip.
Yeah.
For sure. What else is going on in the news? So Bob was getting me into Shibu coin the other day.
SHIB.
Yeah. You're doing some SHIB?
I am doing a little bit in and out of it, been monitoring it, having fun in the Discord, kind of just chatting it up. We've been seeing different formations. We've been seeing little mini Head and Shoulders come and go, and then backing out maybe to a longer, wider view. I've seen like a big giant Head and Shoulders that may or may not be forming or done. But yeah, it's just been kind of a fun trading vehicle. I don't know. It looks like maybe a decent candidate right now for grid trading bots, which we've talked about. It's volatile, and it's just going up and down and not really doing much this weekend. It's kind of just hovering around the 2,700 range. So it'd be fun to see some volume come in and see some excitement. I don't want to jinx anything, but the latest bar that I'm seeing as of 12:46 Pacific in the afternoon on Sunday here, October 10th, looks good, but that could change. That could change in 13 minutes. We got 13 minutes left in that 30-minute bar.
That's true. That could change any second.
Yeah. This isn't one I'm going to put in my 401k. Just
me,
to be clear.
Yeah, I'm typically skeptical of these initial coins, but then Bob was telling me that there's something behind this one because. I think one of the issues with Dogecoin is the supply, right? And they always talk about if it's scarce or not, or if it has a cap on supply. And I guess there's something about Shibu where, millions or billions of them. I mean, it's pretty easy to become a millionaire with Shibu. You need like $50 and you can own like 1.5 million Shibu coins.
It's fun. We're
but,
Shibu millionaires.
Yeah, we're Shiba millionaires. But something that's interesting, I don't know if you heard this, but Bob was saying that a bunch of it's being sent to the Ethereum co-founder, Vitalik. Or I'm probably not pronouncing his name right, but it's being destroyed. So it's like this mechanism they have going to decrease supply, and to tamp down inflation. Did you hear this concept?
I've heard some things about that. Some of it was donated to charity. The rest of it was burned. I'm not sure of all the details, but I think what you're saying is that it has scarcity. It's not infinite.
I think that's the idea. There's like literally a quadrillion of them, and I didn't even know what a quadrillion was. And Bob was like, "Oh, it's 1,000 trillions or something," and I was like, "Huh, that seems like a lot."
Yeah, it is. I don't know where it's going to go. It is, unlike Doge, it's an Ethereum token. I believe it's trading on it's basically an Ethereum token, trades on the Ethereum network. So,
I mean, it just seems to me, Jerry, that every day, every week, every month that goes by, there's just something about crypto that gets a little more ensconced in the ethos or whatever, or in the environment. It's people are using it as a store of value. They are trying to invest in it as an asset. They're trying to use it to solve problems and add value. And I guess one thing I had to share this because we had a show about this, because we had a show about like the origin of money, right?
mm-hmm.
And people forget that money is like a technology, right? It's a human invention. It's not like some god didn't descend on earth and say, here's the natural order of things. This is a thing called money. That's not how this worked.
Right.
In the 13th century, Kublai Khan, who was the grandson of Genghis Khan, created the first fiat currency, right? So he invented it.
And we kind of decided it was a proxy for goods and services.
Yeah. I mean, basically, this was the first money that got its value from a state, right? Declaring it had value.
Mm-hmm.
So it wasn't the first paper money. There was, I guess, Chinese merchants had been using deposits of certificate since the 7th century, but it was the first that was not backed by any kind of commodity such as gold, right? Typically, but solely the power of the state. What was interesting is when you went in to get your money from Kublai Khan, you had two choices. I think we talked about this in one of the shows. Like, you could either use the money that he gave you, or you could die. So that was kind of an interesting choice that you had to make as you left the palace.
That's right.
So things aren't quite as bad nowadays.
Although the dollar is not backed by gold, which is interesting.
Yeah. I mean, so all this stuff plays into it, right? This whole thing. It's a technology. I don't know. Again, I still go back to it. I'm like the 2 to 3% guy, right? Like, I'm adding, I'm thinking just like 2 to 3% of assets. You have it in a few of these things, and
just kind of sit on it and let it run and do its thing. If it does well, great. If not, you're still going to be okay. You're still going to retire. You're still going to pay off your home.
That's what I think. I think that's my way of approaching it. I mean, there's probably people that would be like, oh, that's BS. You should be in or out. Like, are you either all in and you believe in it or not? And it's like, all the arguments make sense to me. But then again, it's an unpredictable world, right? I'm not in charge of anything.
Yeah.
So,
yeah. So. And when I talk about like Head and Shoulders and kind of trading it, looking at it, that's like a very small, it's only like 1 million SHIB.
Yeah.
Very small amount.
$50.
And it's just kind of fun to practice, trading on the technicals, and it's like paper trading almost, but there is a little bit of, there's a little bit of money on the line there. So it makes it a little more entertaining, and you feel like you got a little more skin in the game.
What a world.
What a world.
It's amazing. Yeah. So I don't know. That's where we're at. We talk about that with our premium members too sometimes, but so switching gears a little bit to new technologies. So I'm still interested in, biotech and genomic type investing. As folks know, we've talked about that a lot on the show. And on our site, but it's fascinating to read about the ways that this mRNA will shape medicine. And one thing I was reading about is this CRISPR gene editing, right? It's a therapy for people. And the thing about it that I've been reading, not to science geek out here, but you need to figure out how to get these editing tools like CRISPR into the cells, right? You're trying to fix. So if someone has some kind of disease, a genetically based disease, they have to get these editing tools into the cells. And what I learned this week is that the messenger RNA that was used for the vaccine, that comes into play there. That's how you deliver that editing tool. So I thought that was kind of cool.
The messenger RNA. Okay, very important piece of biotech info there.
Well, I mean, some of this stuff, if you're going to invest in these things, you kind of have to learn I mean, you don't have to, but I like to learn a little bit about the technology, because then you can kind of, Warren Buffett says, try to understand, right, what you're investing in.
Mm-hmm.
And so I do try to do that. I mean, I don't do it as much as he does, because he's like, you really need to understand every aspect of a business. I think he probably spends tons of time researching every little aspect of the businesses he invests in. But I do try to at least somewhat understand what I'm investing in, the basic model, right?
Sure. No, it's best. It's really good to do that and not just blindly follow what other people say. You need to do your own due diligence and try to understand. And it's a great way to learn about the technologies. I'm just curious, like from a pricing, like let's look at ARKG, which has, I believe it has CRISPR and other future. It's like, when are they going to turn around? They've just been going down for a while. And
you're right. I've wondered the same thing about that one. It's they've had a rough patch, and I don't really know. It's like, is this the quiet time before it picks up? I'm asking the question. I don't know. Right.
Yeah.
Or is it not, is it something that in the future we'll kind of go, well, we thought that, that sounded good. It seemed like it was going to be, some of the next sort of big things and sort of ways of helping people and making money, but maybe it's not. I don't know.
Right now, everybody wants energy and financials.
Yeah. I mean,
sectors rotate.
It just changes every month, doesn't it?
I think, yeah. It does. I like to play follow the leader and invest in kind of what's moving up, sell calls against it until I can't, and then, buy it again or do something else. But it would be nice to see ARKG and some of the other genomics stocks start to turn around. Maybe they're bottoming out now and will reverse soon. Who knows? Nobody knows.
And maybe I'm making a mistake by being too infatuated. Sometimes I think like people can get too infatuated with an investment, and too infatuated with the technology, too infatuated with the company. And maybe that's kind of a lesson there to not, I don't know. Sometimes maybe we shouldn't do that. They're only investments. We don't own, we're not part of these companies. We're not the, people that invented the company or started the company, or, it's not like it's our life's work in these things. We're investing as vehicles of building wealth, making dividends, right?
Yep.
Owning assets. But at the end of the day, if I started doing, if I got further intelligence and research that said that, ARK Genomics is full of a bunch of dogs that aren't going anywhere, I mean, I would liquidate and just move on. I mean, it's not like, it's not my baby.
Right. Yeah. You're not attached. It's not a religion.
No, it's
not a cult.
It's not a cult. Yeah. It just seems that sometimes there can be that out there, that kind of approach to things. And listen, I'm all for rooting for a team, get on your team and, try to do what you can. But I don't know. I don't see investing that way or trading. It's just, you're doing research. You're trying to follow patterns, make the right calls, look at the numbers, do due diligence, but at the end of the day, you're taking calculated risk. There's absolutely nothing in investing is guaranteed. And people just, I don't know, people lose sight of these things, Jerry.
Yep. And well, the nice thing too is that ARKG is an ETF. So you're already by nature diversified by going into ARKG. You're not just in CRISPR. You're not just in some of the other listings that are there. You're in a lot of different ones. So you're spreading your bets out. I mean, you aren't in one specific industry of genomics, and technology, but there at that point. And also, I think when you are interested in these things, you've always mentioned that they're for the long term. And I think if someone hits you over the head and you woke up in 10 years, I think you'd be fine with ARKG. Looking at the balance, we're just like looking at it every day. Here I've got the 30-minute up in front of me right now. I'm going back to July. It just doesn't look great, but I'm sure over the long term, some of these things are going to be amazing technologies that are going to change lives.
Good point. That's a really good point. And they're actively traded ETFs within them. So they're pulling out losers and they're trying to pop winners back in, right?
Yeah.
Like that's happening almost you can go onto these sites and they'll show you what they're adding and subtracting every week. Selling shares of this and adding shares of that, and vice versa.
Kathy's ARK will show you for all of hers, right?
Yeah.
And that's really cool. I don't think that's been done until very recently, that, the retail investors have been able just to see the makeup every day of what she's buying and selling and looking at.
Yeah.
It's pretty amazing transformation here.
But I'm glad we had this this conversation, because it is important to remember, everybody knows this. We're not giving investment advice to anyone. We're just sharing what we do and what we think. And so everybody needs to know that investing is inherently risky. And if a person doesn't want to take any risk, they should not do anything. Okay.
Well, doesn't Ray Dalio say cash is trash?
So that's a great segue.
I didn't want to steal your thunder.
Yeah, Ray Dalio. Let's talk about Ray Dalio. So I hope our listeners and members, read Ray Dalio. And again, I'm glad you mentioned cults before. I'm not into cults. I don't like cults. So anything I ever mention or you ever mention, I'm never saying, or you're never saying, and Bob's, I'm never saying that this is the thing and that's the only person. My point is, expand your mind, take in all kinds of new information, and then make up your own damn mind. You got to think for yourself at some point in life. Well, yes, I think so, but yeah. But anyway, so Ray Dalio, I would encourage anybody to watch his interviews and read his books. I mean, frankly, Jerry, I like some of his books about failing, the importance of failure. He says that the way we fail is very important. So, he's kind of, to me, he's very wise. He's like, hey, nobody makes it through life without failing. It's not a success only journey, right?
It's not. We're going to fail.
We're going to fail. Like I almost think that's like a guaranteed part of the human existence experience, is that we will fail. Right. And to go back to your Star Trek thing, one of my favorite Jean-Luc Picard quotes, and I'm going to butcher it unless I could look it up really quick. But he basically says, I think he's talking to Data, and he says, as a human, you can basically do everything right and still fail. So I don't know if let me look this up, because I don't want to mess it up. This is a great quote. Picard. Quote on failure. Let's get this out here for our audience so they're familiar with this great stuff. It is possible to commit no mistakes and lose. And it is possible to commit no mistakes and still lose. That is not a weakness. That is life. Captain Jean-Luc Picard. There you go. Captain of the USS Enterprise.
Picard was brilliant. Hopefully he'll go up after Kirk. And they can fight it out in space.
Hopefully he would. I would love to see them both go. But I think this applies to investing as well. It is possible to commit no mistakes in investing. I'm adding that, and still lose. That is not a weakness. That is investing. Right?
Yes. Yeah. No, I mean, there's so many ways you could think about that too. I mean, you don't even need to win more than 50% of the time to be successful. It's kind of like the inverse of what you're saying. You could win 40% of the time and still make money if you control your stop losses and maximize your wins and minimize your losses. So it goes the other way. I
think you hit the nail on the head. I mean, Buffett famously says the first rule of investing is not to lose money, and the second rule of investing is not to remember the first rule. Right?
Is to remember the first rule.
Is to remember the first one. I'm butchering quotes generally, but there's a lot of power in that, and actually I keep that in mind when I'm sharing my investing ideas with our premium members, because a lot of times I know you're the same way too, but I'll bring to the table more of the bread and butter kind of dividend aristocrats and the Johnson and Johnsons, and I know no one needs to tell anybody about these investments, but I do try to find the best of the best. I do a lot of research to find the quality. But the big part of the strategy there is to not lose money, and it's to at least have steady gains. So it might not be the sexiest thing that, swings and doubles your money in a week. But at the same time, you're going to have your capital preserved hopefully, and you're going to be making some money on it. So
Agreed.
I think there's something to be said about that.
Totally. Yeah.
So anyway, back to Ray Dalio. So he outlined, I won't go into details on this because it's kind of not really investment related, but he talks a lot about macro movements that are shaping the world. And I always find these interesting. He talks about the debt money cycle, all this kind of stuff, but I try to take it into context and consider it when investing in different sectors to kind of see where the world is going. And so, but the biggest thing, and we put this in the newsletter this week, but one of the biggest things is that Ray stresses diversification. And I kind of wanted to harp on that a little bit right now, because I think it sounds simple and it sounds like something that everybody kind of, I know when I say it, there's a lot of people out there that probably kind of do kind of like, yeah. We know every personal finance guru says diversify. Okay. But I don't think a lot of people do it right, frankly. I think they go, okay, I have a 401k and I own a house and, I'm diversified, but I don't think I don't know if they're necessarily looking at their 401k. And you say this a lot, Jerry, you bring this up a lot. If they're just investing in an S&P 500 index, they're basically overweighted on like 5 companies.
Mm-hmm.
Okay, they have, and I'm not saying they're bad companies, but they have Facebook, Amazon, Netflix, Apple, Google. Okay, so that's not diversified.
No, I mean, even that there are 5 different companies, they're all kind of in the same type of industry, technology and selling goods and services, and
they're all US based.
Yeah, all US based.
They're all huge. So I'll just throw out a few things that you well know about this. I mean, there's no commodities exposure. There's no small cap exposure in that case. There's no inflation protected type exposure. There's no non-tech stuff.
Let me play devil's advocate for you just for a minute. And what about people that come to you and say, okay, well, diversification is great and all, but I see diversification as kind of weakness because you don't have conviction as an investor or a trader in one particular area. Like if you can predict the future, and nobody can, but if someone thinks they can and knows that Apple is just going to go through the roof and over the next year or so, like what's the argument for, if you know this and you're sure about it, why not just put all your money in Apple?
Because I think that's foolish, because of you kind of answered the way I would answer it. No one knows what will happen tomorrow with the world, with investing, with companies, right? Technology, everything. There's so many dynamic forces going on that these things do change. I mean, there's companies now. Listen, you brought up Apple. I tend to think of Apple as a great company that I think is going to be around for a long time and is probably a sound and prudent investment. But there's a big but there. Okay, people would have said what I just said about General Electric 15 years ago.
Sure.
Okay. Yeah. 15 years ago, if there was a podcast, there could have, a very rationally minded investor could have said, General Electric. Yeah, I'm mainly in General Electric, and everybody knows that General Electric is one of the most powerful conglomerates in the country, in the world, and that, it's a sound investment that's probably going to be here. So, but look what happened. It's nothing. I mean, it's not nothing. I mean, General Electric might be a good investment now that it's been destroyed for years. And
yeah, but the context, like that could be the next, Amazon could be the next General Electric. We don't know.
Nobody
don't know. Knows the future.
We don't know. So that's the point. And you talk about this a lot, where I think that if I was to go down that path too much, Jerry, that I think that I'm going more into that idea of a cult. Where and listen, I've got Apple products surrounding me right now, and I love them. So like I could be the first person, one of the people to say, oh my God, this is the greatest stuff ever. And oh my God, this company's gonna be around forever, and they have, monopoly and everything. But I think we have to be wise enough as investors to just say, well, that's maybe not. Okay.
Yeah, I mean, somebody might say, they're not innovating like they used to when Jobs was around. Now they're trying to be more subscription services. Maybe people don't want to keep paying every month for iCloud storage and all the other things that you get with it. Maybe they're getting tired of that. I don't know.
Yeah.
Time will tell.
So that I think that again goes back to the idea that people really need to think more deeply about diversification. And you talk about it a lot of time, uncorrelated assets. What are things that aren't connected? I mean, maybe we live in a world now where everything's connected. So if something goes down, like if, we've been in this housing tear, it seems that housing might soften a little bit as interest rates go up and other things happen.
No, I've found some uncorrelated assets that you can put all your money in right now and be safe. No, I'm just kidding. But seriously, I mean, the assets that I found that were the most fairly uncorrelated is corn and Bitcoin. Corn, the commodity.
You're being serious, aren't you?
I'm being serious. Corn, the commodity. It's just an example. It's kind of it's an exaggeration, but I mean the idea is that corn, the crop, and corn the crop, and Bitcoin, the digital asset, they have a correlation right now, I think on a 3-month rolling data set of 0.1, which is pretty low.
Wow.
So corn could do something, it could go way up, and Bitcoin might just stay where it is. It might go down. Nobody knows, but very, very uncorrelated. But if you buy, say, QQQs, which is the NASDAQ 100, and you buy a lot of SPY, your correlation is much higher, like a 0.96. They almost move together in tandem.
There you go. I mean,
so these are just things to think about.
Things to think about. That's the idea. We're trying to stoke thought. I mean, here's another one. Let me throw out about along the same similar lines. I talked about it before. 2 to 3% for me is my comfortable level of crypto. Okay, but I also like real estate that you can actually go like see and touch and modify and paint. Okay, so let's say tomorrow. So China is trying to shut down crypto, right? Which maybe that strengthens it, but maybe another country does something to shut it down or to limit it or to regulate the hell out of it that kind of takes away the purpose or something like that. And let's say it plummets. Well, that's fine. I'm still going to be able to walk over and I still have a house, right? That I can paint and I can rent and I can live in. I can do things with it of value, right? So I don't know. I'm just thinking again about like diversification. Okay. Yeah. There's things that are cryptographic and are like the matrix and I can see the code. And then there's things in the world that are assets that are tangible. You can touch them. I mean, people like to talk about gold. Like if you have gold bars in your house, I mean, you can touch and hold on to your gold bars. Okay. They're not like, a company that can be totally destroyed by a hedge fund or can, have really poor management and you lose all your equity,
Totally agree. And just, I'm looking at the correlation matrix, and anybody that wants to look at this stuff, just Google correlation matrix stocks. You'll get several tools out there. Real estate and Bitcoin have a 0.51% correlation, which is pretty loosely correlated. I mean, I know I said 0 is no correlation, but anything below 0.75 is generally generally fairly low correlation. So real estate
Jerry,
and Bitcoin.
Here's the thing. You and I, and we talk about this with our members and stuff, but we know black swan events are going to come. You and I we're not even that old. We're not quite as old as the car talk guys. I mean, we're still like, I think somewhat on the younger side of life. But we've been investing for a while. But you and I both know black swan events happen. They've happened like 5 times just in our investing lives, right? And so I'm not naive enough to think that, well, those were the 5 and there won't be any more. Like nothing else is going to happen in the world. Something's going to happen. I didn't see a pandemic coming.
Right. Nobody did. I mean, some people did. Bill Gates did, I guess.
But nobody did listen to him. But and my point is to not be scared. But here's the deal. I'm going back to, I liked your devil's advocate argument, because I think you're very right. A lot of people would say that. They'd say, well, you lack conviction. But I guess I would ask them, okay, that's fine. Tell me what's going to perform best over the next 2 to 5 years. Large cap, small cap, dividend, all stars, REITs, hard real estate, art, options trades, crypto. Tell me, because you have a crystal ball, what's your conviction? Okay, right? Number one, it was what I'd ask that person. And then I'd say number two, if they told me, oh, it's going to be artwork. It's all about art now. I'm going to say, okay, I want you, okay, then put your money where your mouth is and put your entire, your entire net worth, right, into art.
Yeah.
You know, and maybe that'll work out for them, but maybe it won't.
Mm-hmm. Mm-hmm.
or they're like, no, it's all about real estate investment trusts. You know what? I love REITs. Okay. But what if I said to somebody, no, so the next 5 years, all about REITs, nothing else, everything else is going to perform poorly. Well, I better be putting all my money in REITs because I seem to have such conviction. But I don't know how anybody could have, things are too dynamic, Jerry.
Yeah.
It's too dynamic. I mean, so my point would be, for me personally, you know, people do whatever you want. Everybody in the world, free agent, do what you want. But I'm going to go with a mixed portfolio of those things. I'm going to have some dividend aristocrats. I'm going to have some REITs. I'm going to have some art real estate. Hell, I might even buy some art. I don't know. I'm going to have some crypto. You know, I'm going to have, I might wait, or what's the word? I might go heavier into things, right, that I have more conviction on.
Mm-hmm.
Okay, right. I might go, okay, like if I'm a huge crypto head, like I'm like Bitcoin bonkers, and I'm like, yeah, this is it. The great, you know, this is the greatest invention since the wheel. You know, it's like there was the wheel and there was Bitcoin. Those are the two greatest inventions.
Sliced bread.
Yeah, right. Then okay, maybe I'm gonna go heavy on Bitcoin. You know.
Yeah, I think commodities are really under appreciated right now. At least, I mean, they've kind of been dead for a while, but it seems like they're waking up, coming back. Oil seems to be coming back. A lot. Like if you look at this ETF called DBC, it doesn't pay any. Actually, it might pay dividends. I don't think it pays dividends. I think it's just a wrapper for some futures. But yeah, agriculture and oil and commodities are really low correlation item that recently seem to be picking up. So it's definitely something to look at. You don't hear about it when people say, you know, the 60-40 breakout of stocks and bonds. It's just kind of that's enough. Or even the retirement funds as you age and change, they don't really take a lot of that stuff into account. But take a look at gold, precious metals, corn, soy. There's vehicles for investing in these, and there's ETFs just to capture the commodities market and see if it's something that your portfolio might need to smooth out some of your correlation and your diversification.
Okay, can I blow your mind?
Please.
And I hope this blows our audience mind. Okay, TMV Listen, guys, that's the code. TMV Listen. If you want to join premium, get in a Discord. We'll talk about it all the time. This is what I think. Okay, here's the deal. And this is the other argument I would have towards your devil's advocate person. Okay. Why would I not do something that I'm going to call wheeling my investments? And here's what I mean by this. Okay. I'm ready. You ready?
Mm-hmm.
Are you sitting down?
I'm sitting down.
Okay. Let's say I have a well-diversified and fortified portfolio of a bunch of things that I mentioned earlier. Okay. I got large cap. I got tech. I got healthcare. I have small cap. I got consumer defensive. I got dividend aristocrats. I've got REITs. I've got some hard real estate. I've got some art. I've got some crypto. Okay. It doesn't have to be everything. My point is you have all these buckets of assets. Okay.
Yep.
There really should never be a day. This is what I don't understand about people investing sometimes. They get so fixated on the top line number on a day-to-day basis. Oh man, I had a portfolio. I got 450,000 and now I'm down to 400,000. And then next week I'm up to 600,000 and now it's back down to 550. But people, you got to remember something. You're not the point is not to take all that money out on one magical day when it's hit the highest number. You're trying to create future income. You're trying to create a portfolio of assets where someday. So my point is, sometimes it doesn't matter what the top line fluctuation is. If you build $1 million portfolio, by the time you're 55, okay, and then you have some other things and you want to retire or be financially independent. The day you retire, the next day, Jerry, that portfolio could drop to 930 in value.
Yep.
Are you
going to sequence risk, actually?
Okay, there you go. So is the idea to like run out of the house with your hair on fire and be like, oh my God, this is it's not going to always go up. But the point is, every month, you're going to draw, let's say $1 million portfolio, you probably want to draw 4,000 or 5,000 off of it a month if you want it to last a long time. Okay.
Yes.
Right. So that's the idea. Okay. But here's the deal. If I've got a diversified portfolio, I can wheel when I sell investments. So my point is this, let's say 1 year, my first year of financial independence, large caps get destroyed. Okay. But I've got a bucket over here of small caps that kick ass.
Mm-hmm.
Okay. Well, why don't I sell that year? Why don't I live off the small caps? You know what I'm talking about?
Yeah.
Let the large caps sit for a while until they regain. Okay.
No need to sell at a loss.
That's what I'm saying. And then the next, and then let's say your fourth year of retirement happens to be the best year for real estate investment trusts in the history of humanity. Okay, great. Those really did well. Let me take some of the icing off the cake there, right? Let me live off of that.
Yeah.
So you know what I'm saying? You don't need, or let's say, and then let's say in year 10, you're a true Shibu Inu millionaire. Okay. Hey, maybe in year 10, it's time to take some of your Shibu out.
Totally.
Yeah. Okay. You get the idea. I mean,
I get the idea.
People, it just seems to me sometimes newer investors get so fixated on, what's that bottom line number? And I'm not saying you shouldn't pay attention to that. That's important. Okay. You want to grow that number over time. But what it is 1 week, what it is the next week, I mean, it's just going to go up and down. And again, the only way it's not going to move is if you stick it in a savings account and you lose 3% or 4% in inflation every year.
Mm-hmm.
That's the only given you have.
And that's the cost of keeping liquid assets there. I mean, you're basically paying to do that because you're not getting any interest on them.
Yeah.
And maybe that's okay for an emergency fund for a little bit.
I hope that blew your mind. It probably didn't, but
it did. Actually, when you talked about wheeling, I didn't think about it in that way. That was neat. I thought you were going to go into like an option strategy called wheeling, where you sell puts until you're assigned the asset, then you buy it, then you sell calls against it till you're forced to sell, then you sell puts again. That's also wheeling as well.
Wow. Okay.
I like that one too. You could probably do that in your retirement.
Yeah, we're gonna have to talk about that on the show sometime. That is cool. But I kind of made that up on the fly, but you get the idea.
Yeah, it's great. I like it.
It's maybe what it is it's strategic. It's strategic. We should talk more about this, when to sell an investment. I mean, a lot of times I'm selling an investment, frankly, maybe I kind of am doing this. I mean, I sell things because I need the money at times, right? Like I'm doing a bit, if I'm doing some big. There's
always that. Yeah. Sometimes when you get older too, you've got RMDs, at least in the US, required minimum distributions. So you are forced starting at certain ages to take money out of your Roth or your IRAs, your Roth IRA. Mm-hmm. Roth isn't so bad. There's no taxable events on that. But for the IRAs, when you take that out in your 401ks, when you're forced to take money out, you are going to be paying lots of taxes on those in the future.
There you go. See, I mean, again, strategery. You got to be strategic about this stuff. As the point of all this stuff is we're trying to fund our lives, right? I mean, maybe I'm wrong here, but I mean, the point isn't here to die at 85 years old and, oh my gosh, I never did a thing, but I amassed this, I've got $6 million over there and I passed away, but never did anything that I wanted on the house. Never went on a trip I liked, never had any nice food. Never, I mean, the idea is to fund the things that we want to do, the priorities we have. And, some people, their priority is free time, right?
Yes. Yes.
So they're trying to amass an amount of money so they don't have to go to a 9 to 5 every day.
Yes.
But other people have different priorities, and I get that. They want to, I mean, some people really like cars.
Mm-hmm.
And so I talk about, millionaires drive 10-year-old Toyota Camrys. But you know what? I'm not offended if somebody says, you know what, Greg, I like really nice cars. And that's one of my top priorities in life is someday I want to own, a blah, blah, blah car, whatever car
it's a financial goal that you plan
I would
for.
say go for it.
Yeah.
If that, you just have to know the opportunity cost. I mean, you're probably then, if you're a, middle class earner, I mean, you're probably not then going to be able to go on the, kind of some big vacation you want to go on as well, or you're probably not going to be able to pay for your child's education, or, there's going to be some
maybe
cost
you
to
delay
it.
your retirement 10 years.
Maybe, right. Maybe you're working another 5-10 years because you wanted the Rolls Royce, but hell, you got the Rolls Royce and that's what you wanted. Great. You can even sleep in it.
Oh, then you can write it off as a tax deduction. Just kidding.
Yeah. But that's the thing, Jerry. We talk about all these things. It's about building the life you want, the priorities. We have to somehow in our mind prioritize, what we want to spend our money on. But again, I just feel like sometimes people miss, get straight what your priorities are, because you could probably work towards them. I mean, a lot of what we talk about is, you got to have the basics down. You have to have stable income. I mean, in the US or any place, I mean, you need a stable job, because you got to have that income at first coming in that you can build upon.
And the health insurance.
The health insurance. Yeah. I mean, you need that foundation. Otherwise it's like, this just doesn't work. But anyway, so I don't know, I guess I'll leave it at that. I'll wrap up on diversification in my little, platform here.
You really got on your soapbox today.
I really got excited. I really did. I just want to, I'm trying to, well, I'm just explaining the way I think about these things. Again, people do what you want. That's the way I think about it. If you don't agree with me, don't get mad at me. Just go do what you want to do. I'm not in control of your life. Okay. I wish you the best. I honestly, I mean people well. I don't,
Yes.
do what works for you. This is what I do.
Yeah.
Jerry, what are you doing for next week?
What am I doing for next week? Wow. There's a lot of earnings and it's focused primarily on financials. So it's kind of a PSA to our listeners. I just want to call out a few things that are going on over the next 5 days or so. So Monday, obviously, Canadian Thanksgiving. So I don't believe the Canadian markets are open. U.S. markets are, maybe limited hours. What do we got on Wednesday? We've got JP Morgan reporting. We've got BlackRock reporting. We've got Delta Airlines reporting. Some FOMC minutes. On Thursday, we've got Wells Fargo, Citigroup, Domino's, Morgan Stanley.
Yum.
Yeah. Friday, we've got Goldman Sachs and Charles Schwab. Somewhere in there next week is Bank of America. I don't have the exact date as of yet, but it's happening. So I'll be watching a lot of those financials. What I'm looking for are high implied volatility ranking and very good liquidity, meaning the ideal is penny wide between the bid and ask for all the options. And what I'd like to do are either strangles for the lower priced items or iron condors, $5 or $10 wide iron condors for the more expensive ones. And
awesome.
JB Hunt's in there too, if you're a fan of trucking and delivery and shipping, if you feel that's going to be good for the next.
I love the way you share your iron condors with our premium members. They're awesome. Yeah.
I mean, all they are basically they're neutral trades that you set 2 points with the stock, a lower and a higher. I mean, they have wings, and so there's 4 legs, but forget about that. It's basically just 2 points, a high and a low, and you look out 1 or 2 standard deviation from as long as you feel it's going to stay inside that your 2 points that you choose, you will do fine with those.
That is awesome. Yeah, you share them each week, what you do with our premium members, and they get to see the ideas laid out black and white, how to do it.
And how to manage them too.
How to manage them. Yeah, I love it. TMB Listen, all capital letters if you guys want to join. And come talk to us. Good stuff, Jerry. Anything else?
Not really. Just kind of gearing up for a nice 4-day work week. And I'll be trading on Monday, looking to see what is high IVR. and maybe I'll roll some covered calls. That's about it. Yeah, we got what is it? UIS is another one. We're doing covered calls, and that is over our strike price. So we may be forced to sell, which is a good thing because we will make a profit on that. And if it goes below, we'll probably roll it out another month, or we'll see what happens. These are fun.
Hey, have a great week. Thank you everyone for listening, and happy investing and trading.
All right.
See you,
Have
Jared.
a great week. Bye.